Hello. So today we're going to talk a little bit about mortgages. Now, mortgages are so complex. There's a lot going on. But the first time you get one, the thing to think about it is it's a loan to purchase a home. And so typically what you're going to do is go get pre-approved. So with pre-approvals, what you're doing is you're going to a broker, a financial institution of some sort, giving them some idea of your expenses and your income, and they're going to issue a pre-approval up to a certain amount. So first, I want you to remember that that pre-approval does not mean that you can necessarily afford to purchase at up to that level. So you really have to know your numbers and have a good spending plan put together, and then analyze if you add in a mortgage payment, property taxes, and depending on if you're renting or not, having a little allocation for things to go wrong, what that will look like for your overall spending. And that starts to really dictate what level of home you can afford given the mortgage rates and things like that. The other thing to remember with a pre-approval, it will help you give you an idea of range. It will help you know what level of home to look for with a realtor and things like that. And more realtors, if you're pre-approved, they're going to think you're a little more serious. So they're more open to working with you perhaps. One of the things that you have to remember is that a pre-approval is not a final approval, and they haven't done the full level of review of your situation. So even though you have a pre-approval, you might not be approved for the same amount. So there's a bunch of factors that will go into this pre-approval and the approval. So let's start with your credit rating. So your credit rating is something we're going to go into a little further in another section, but you really want to have a good credit rating. You don't want to have too much open credit, all these types of things. And so they're going to look at your credit score. The second thing they're going to do is look at a couple of different ratios. The first one is called your gross debt servicing ratio, or GDS. And they're going to want to keep that 35% or under. So what they're going to do is take the total amount of income you make, and this is gross. This means it's not what's on your tax, it's not on your pay slip or what gets deposited in your bank. It's the total pre-tax. So before any of all the deductions that come off your pay, what is that number? And it's the number they use for that calculation. So they're going to look at your cost of your mortgage, that's the principal and interest payment. They're going to look at property taxes, heating, and about 50% of condo fees if condo fees are involved. And so when you take all those numbers and add them up and then divide them by your gross income, you want that number to be 35% or under. There's a second ratio they're going to look at as well, and what they're going to do now with is called total debt service ratio. They want that to be in the 42%. Depending on the situation, they may be able to inch up a percentage or two, but they're pretty locked down on that. They're going to add in all your other debts, your credit card payments at 3%, the balance. They're going to look at your lines of credit you may have open, and they're going to figure that out too. They're going to look at alimony payments, car payments, things like that. All these things are added into the mortgage stuff we did in the gross debt, and then they're going to do that same equation. They're going to take all those numbers added up and divide them by your total or gross income for that month, and they're going to figure out what that ratio is. And that will have a big bearing on how much they will approve you for. So you really want to know all these things and be very, very aware that this is the kind of things they're looking at. And then also to be aware that if you're in pre-approval and you make a home purchase, don't open any more lines of credit. Don't do anything. Keep that all locked down until such time as you are actually closed in a property. So that is the pre-approval process and for mortgages, and watch some more for some additional information on how to deal with a mortgage.